Welcome to YesAcast.
The most striking resemblance between our time and the period of a century ago, let's say the years from around 1880 to 1914, is the fact that there was so much mobility, that migration was in fact at a higher level in relative terms than today. So in terms of sheer mobility, globalization, one, was in fact a more extraordinary phenomenon than globalization, two. There was also a very high level of trade. Capital movements, flows of capital across borders, have reached a higher level in our time than then, but only recently. The first stage of globalization saw a tremendous amount of financial intermediation, of cross-border investment, and in one respect it was more global because capital flowed to the whole world, including very poor countries, whereas today most capital flows are actually within the rich world. So those are the obvious resemblances in economic terms between the two ages of globalization. But there are some very important differences. One obvious difference is there were many fewer people. I mean, this is not a world of 6 billion people, but a world of 1 billion people. The issue of environmental disruption, although it was an issue locally, you could hardly breathe in London because of smog, was not a global issue. Monetary arrangements were very different. 100 years ago, most countries, with a very few exceptions, were on the gold standard, and therefore you could feel confident that your money could be converted into an equivalent amount of gold. We today live in a world of paper money, and nobody knows from one day to the next how much the dollar is going to be worth in terms of other currencies. So that is an important difference. And in many ways, I think from the point of view of everyday life, it may turn out to be the most important difference. If we switch to talk about geopolitics rather than just economics, the first age of globalization was an age of empire. 25% of the world's land surface and 25% of its population were under some form of British rule or other. A third of the world was under some kind of European rule. Most people, 80% of the world's population, lived in empires, if you also include the great Eastern empires like the Chinese Empire or the Ottoman Empire. So it was an age of empire. But the most important empire was the English-speaking empire, which had its headquarters in London. And one reason that this empire was so powerful was that it was a capital exporter. It was the world's banker. London was an extraordinary channel through which money poured to the rest of the world in the form of portfolio or direct investment. And the British had the power that the lender has, the power that leverage gives. Now today we live in a different world. The empires have largely gone. There are only vestigial empires left. There are 192 nation-states at the last count. And yet, there are still shadow empires that don't call themselves empires but behave like empires. The United States is obviously one. China is obviously another. Russia, the Russian Federation, is a third. And you might also include Iran as a kind of the heir of the Persian Empire. But in a way, that English-speaking empire, this time around, the American Empire, is weaker than its predecessor 100 years ago. Because the American Empire is not a creditor, it's a debtor empire. It borrows from abroad. Billions and billions of dollars have to be borrowed abroad by the United States to finance its current account deficit. And in the last few years, we've seen a dramatic change in the character of capital flows into the United States. It has ceased to be private investors looking to the S&P 500 for the best possible return. It's become public sector and principally central banks who have been the big buyers of US treasuries. And so we are in the extraordinary situation that the United States, which claims to be the dominant power, the hyperpower of our time, is in fact running an overdraft at the People's Bank of China, the central bank of communist China. It's an extraordinary state of affairs, and it's very hard to foresee quite how it will unravel. But I think one day it's almost certain to unravel. it's important to say that there is no such thing as the future. There are only futures, plural, multiple futures from which we collectively try to choose, not always very successfully. And so anything one says about the future is an educated guess, because I certainly don't have the power of prophecy. The important thing, though, is to make sure that you are contemplating more than one future. And those who say China will be equal in terms of gross domestic product to the United States in 2027 are really only offering one future. And it's a linear future in which China's economic growth will continue at 9 or 10% per annum, and the US will continue to grow at between 2 and 4% per annum, and we will get there as if by drawing lines. That is not how history works. And it's extremely unlikely, in my view, that that will happen. Because in every Asian economic miracle there has been since World War II, there has been at least one, and often more than one, major financial crisis that has set back the country, at least for a period of a year or two. Of course, in recent times, Japan has been set back by more than a decade, but that comes at quite a late stage in Japan's development. I think China runs the risk of something a little bit like 97, 98 and the Asian tigers. Now, the Chinese have tried to insure themselves against this. They do not want there to be anything like the Thai crisis or the Malaysian crisis. Hence the accumulation of reserves, wildly more than they need, $1.3 trillion of reserves, the ultimate economic insurance policy. But you see, you solve one problem and only create another. You've got tremendous inflationary pressures building up, not least because of these reserves, which can only be partly sterilized. Furious financial innovation is going on. The Chinese are discovering credit cards. They're discovering the stock market. The stock market seems to me to be close to being in a bubble by most measures. And at some point, there's bound to be a reverse of sentiment. When a society discovers capitalism, or rediscovers it, might be more accurate in China's case, experiences all the greed that financial markets can inspire in people, and then experiences the fear, the overreaction can really be quite enormous. And I think that's a plausible scenario. A Chinese financial crisis with really big real economy ramifications. Of course, there are other things that could go wrong, and they're already going wrong. China's environmental situation is dire as a consequence of breakneck industrialization without private property rights. Nobody in China can stop the state or a private enterprise from causing lethal damage to the ground or to the water, because nobody has any private property rights to protect. My sense is that maybe even before the financial crisis, China is going to find itself in an ecological crisis of its own making. And then we'll look back in 2027 and laugh at the thought that we imagined China overtaking the United States. Remember, we thought Japan would overtake the United States back in the 1970s and 1980s, and of course it didn't happen.